Hello guys, welcome to the Trading Parrot. It was a busy week, so in this video I'm gonna try to wrap up everything that happened over the week, including the reclaim of the 200 moving average. I'll give you my take on that. What is the likelihood that over the weekend we potentially go a little bit lower below the 200 moving average? I'm gonna introduce a very interesting indicator from Martin that compares the changes in the last 24 hours of the open interest versus the changes of the price, forecasting local tops and bottoms, pretty precise, so it's worth having a look. And by the end of the video, we'll keep an eye on how did we close the week for the stocks and indexes. Guys, if you like this type of content, make sure that you're subscribed to the Trading Parrot. Hit the notification bell to get notified every time I put out one of these videos. As you can see, I started introducing videos dedicated to a specific coin. The intention is to give you an in-depth analysis on a specific coin, so go into any of these videos and leave down below, including this one, a comment with any coin that you want me to do a full analysis. I can see that they're doing fairly good. Also, let me know if you prefer the videos that are half an hour that cover 20 coins in a single video, or if you prefer the in-depth, or both. Alright, let's get into the content. Don't forget to hit the like, that really helps the channel. Let's go with some news. These are the hot stories on Cointelegraph, and I'm gonna cherry pick just 3 news that stand out in my opinion. Number 1, this is a technical one and I really like it. I find it fascinating, this breakdown of Bitcoin over gold. There seems to be a 12-year support trend line applied to this ratio that I have never done. You know that I love doing ratios. For example, I have dedicated videos analyzing Bitcoin over Nasdaq, over the Federal Reserve balance sheet, the VIX and the DXY. All of them incredibly useful to provide insights. And I think some of you recommended me to do also over gold, and I never did it. So in this article, we can do a catch-up, even though it's not my own analysis. But as you can see, there is this 12-year support trend line. I suspect that this is a logarithmic chart. There are some touches multiple times of the trend line, and around the current prices, you can see that there is a deeper pinch of the support. Of course, this is on a weekly basis. I'm not sure really if it's been just this week that we are below it, so maybe the full moon could help a little bit to close this week back above the trend line to keep the trend line still relevant. This is all thanks to all-time highs on gold this week, over 3,000. That was yesterday. ETFs on gold keep accumulating, while at the same time, the spot ETFs on Bitcoin have been having pretty bad days in the past 2 weeks, full of red. This chart in here is very interesting as well. We can see again Bitcoin over gold. This is the 2-week time frame, and you can see that they're pointing out 2 things: that around this time in the cycle, in the previous cycle, we were having here a depression. That's the first EMA support. The second EMA occurred, I believe, in early 2022. And you can see on the RSI, the bearish divergence. And they're pointing out that we are kind of in the same situation in the fractal. So this particularly is not a bullish call. They point out that after the pattern completes, if we were to follow the fractal, we are supposed to be due for a 68 correction right after and entering in the bear market. It is definitely worth mentioning that the timing is not the same, because that correction of the second EMA starts in 2022, which if we project that to this cycle, that should be early 2026. After reading the article, I cannot find anywhere where they say, sure, that looks precisely the same in the fractal, but in terms of timing, it's kind of 1 year too early. In this article, crypto regulation shifts as Bitcoin eyes 105 amid liquidity boost. Bitcoin price faces pressure, but macroeconomic trends and regulatory shifts could drive future growth, with BTC poised to reach 6 figures once again. This is just speculation, of course, and here's something interesting that I've seen multiple times in social networks, that the recent rise in the price from 11 of March from 76 to 83 has been driven in part by leverage investors aggressively buying the dip with leverage. So watch out with that. You can see how the longs have increased significantly in this dip, but to be fully honest, there was a very significant increase as well before we left the megaphone pattern. That is also very well documented in here, where we see the aggregated open interest. When we left the previous range, the open interest went from $18 billion in open interest aggregated in average all the way to 32 in average. And actually, with this move down, all I've seen is the open interest coming down. If we focus on the most recent moves of the open interest, you can see that it's forming some sort of W pattern for the first time in here and forming just the neck. So that is an interesting pattern, not necessarily to confirm a reversal, but at least to keep an eye on it. There's been a proposal to cut inflation rate by 80%, but it failed to pass on Solana. You can see how many people voted in here, but apparently they couldn't pass it. I believe there are concerns about the inflation inside the Solana network, but of course the people that love Solana think that is not a problem. After not passing the proposal, there was just a mild dip of 1%, 1.5 on Solana. Alright, next week, what matters is that we have the FOMC meeting, and since yesterday, the chances of a rate cut went from 3% to 2%, so now we are sitting at 98% chances that there is a note change on the 19th of March. That's in 4 days. We are almost sitting in a green month in March with this recent move back up. We are at 0.4. We are challenging the 200 MA. We are challenging levels to regain potentially daily support, but historically speaking, a red February has spelled a bad forecast when it comes to March being in the green. As you can see, typically after a red February you get a red March. That's just past performance, but worth keeping an eye on that. Alright, let's go to the 4-hour time frame and let's see what happened last night. Yesterday I was saying that we need to defend on the 4-hour the 84, and we have a little bit of a dip in here, slightly below the 84, then we managed to close back above 84, and we are just going sideways around that 84 for now. Remember that last night what I said is that there is a decent chance that we go and we take some of these fair value gaps in here. They are located below the 200 daily moving average that so many people are talking about at the moment, but there is a caveat. We close the price on CME at 84.4 and on Binance at 84.6. So we are going to leave a line right here to remember that number, because if we were to have that dip over the weekend, we're going to produce a similar CME gap as we did in the past week. And you can see we dipped to 76 and then we came back to close the gap. We didn't fully close it. We left $200 in the CME premium, and I had to adapt the gap on Binance, which I was expecting it to get to 86,500. But since there's only $200 left, I move it down around here to reflect the fact that we are just $200 away from filling it. So what will happen if over the weekend the price starts pumping? Is it gonna close this gap? And the answer is no. That is my humble opinion. The reason is because if CME, the Chicago Exchange, is closed, and closing a gap means filling orders that were unfilled, unbalances in the exchange in those ranges, there's no way that can be filled if the exchange is closed. So price going up in here over the weekend will create a new gap in this area that will overlap with the remaining part of the previous week, in which case we ignore the previous week and you just focus on the new gap. If we form a gap below the price because we have a dip over the weekend, then we are going to end up with two gaps, a $200 gap at the top of the price and a new gap on the lower end. Let me know in the comments if that makes sense. Whichever side we get the CME gap, it acts as a magnet. If you want to get access to this particular chart, you can go to the tradingparrot.com/charts. The chart is for free. Everything that is written, all the labels in this chart are there. Just search for the fair value gap chart in that page. If you cannot find it, just join my Telegram, join the conversation and ask the rest of the community. So continuing with the 4-hour, last night I mentioned that there is a good chance that over the weekend we come in here to test support at 45. That yesterday was at around 81.6, but as the price comes down, the moving target is starting to shift away from the third fair value gap into the second. So if we continue at a slow pace in here, we might just meet with the second one to be able to test the support. Testing the support doesn't guarantee successfully testing it. It could mean as well a breakdown, but for now I'm looking into a test of support. I'm hoping that over the weekend we don't go for the 87, we don't go for the 90. I don't want to be leaving gaps below. We already have tons of reasons to have weakness in the price, and putting another reason to think we're going lower is not great at this point. Rather than over the weekend we just go, we grab fair value gap 1 or 2, that's it. On Monday we resume the uptrend to 87. I'm gonna show you how much liquidity we have in there to see what's the motivation to do that. If we can achieve that recipe, then we still have a chance for this very early formation of a channel to the upside on RSI. I call it early because all we have so far is a bullish divergence on the daily already confirmed here. I was calling for it since 11 of March, but the line in green has just appeared in the chart. That's because we look for divergences with pivots that are confirmed with enough closing candles. We seem to be now in the way towards the yellow line to potentially have a global breakout. I call it global because from top to bottom you have a complete line of defense that we need to break now from the very lows. This is not just any low. From 24, a range to 85, a full reset that also breaks the support from 2023 on the RSI. So this is as significant as hitting the 1, 2, 3, and 4 that we had done in the full bull market, rally by rally. So if we break in here, at the very least, we could get a dead cat bounce with enough momentum to give us some highs that many people are not expecting. Maybe we don't necessarily get to 85 like we have done in 1, 2, 3, 4. Maybe we just get to 70, but I promise you, if we get to RSI 70, people already are gonna be like, what? Were we not supposed to go to 60? But that is, again, not a forecast. This is just likelihoods that currently are increasing. We need to go step by step. That 4 hour, we need to put the check. If we don't put the check, then forget about talking about this channel to the upside. If we put here a low and we take the RSI 32 on the daily, that's it. We shift, we have to add another order and exit earlier. It's been 3 weeks that we are defending the 80K psychological level. That is good, but let's face it, this red candle in here, the largest in history, is a quite heavy thing now to deal with. We need to decide if this pinch of 76.6 counts as a kiss to the 73.5. There is a gap there of around 3K now. Previous time that we did the test, the gap was just a handful of dollars. This was at the 49 versus the 48 high of 2024. On the weekly, potentially this week we might get a bullish cross. So watch out for this. As long as we defend enough and we don't go for all the fair value gaps and beyond that on the 4 hour, we could be seeing a bullish cross on weekly, and that is definitely significant. On the RSI weekly, things don't look as great because we lost the support and we are currently going to test that resistance of 50. There was a very similar situation in June 2024. We lost the main support on the weekly support of RSI and we came back to do a retest, which the first time failed and put a new low at 44. That is just past performance, but watch out with something like this, rejection at 50 and then a breakdown below the support of 45 that we have held 1, 2, 3 times so far. So if we get rejected by that 50, we might lose it and go lower. And one more insight, that green line of 41 there, if I remember right, that is the lowest we can go in the RSI weekly in past performance before entering a bear market. So we are very close. That 45 is kind of a nice area to regain back momentum and start doing a reclaim of the yellow lines and then some sort of rally, and that's it, maybe following this trend line like this. But of course, rejection at this point is gonna produce at the very least a way deeper correction in here. So let's keep an eye on that. Since no one is gonna remember RSI 50 is what we need to reclaim, I'm gonna give you the current price, which is 86.3. If we reclaim 86.3, then this is gonna look great because we are reclaiming a very important support and we have higher chances to break above the dotted trend line and have a rally of significance. We are still with a red candle in a topping year, which tends to be a green candle. So let's see if 2025 is gonna be the first year that in a topping year ends up in red, or if we reclaim 94.5 and we end up closing higher to continue with the trend. To be fully honest, that this topping year in 2013, there were gains of 5,000. The body in here did 1,000.3. In 2021, it barely did 57%. So if we continue with that trend line and we do any sort of projection, even a linear one, it could be possibly just a 0% gain or even a negative, and potentially it would match with that trend of diminishing returns in the topping year. Having said that, you can do like 2021, that you go all the way to 69 and you end up closing the year at 47. So that closing in red this year doesn't necessarily discard topping even at 150. You can go to 150 and close the candle in red still. So don't read that as we cannot go higher, but read it as we could end up 2025 with a very small body candle for the yearly. On the monthly, things don't look as great. We lost the support on the monthly and we have now an indecision candle for March. I'm seeing some people flipping on Twitter. Many people saying we're going lower. They had their targets, influencers, and some of them are starting to say maybe, just maybe, we're not gonna get that low. And I think that candle reflects that. Still, I will say more than half of the people at the moment are looking for more bearish targets and they're waiting to enter at lower prices. And I promise you I was gonna review this new indicator. This is not gonna become part of my arsenal. It's just something I found really interesting on Twitter. You should definitely follow this account. He's called Martun with double A and double N, and he's got tons of indicators on CryptoQuant using on-chain data, statistics and everything. Really impressive work. And this one, he has it with versions for Ethereum, Bitcoin, and I think Ton as well. This tracks the price change in percentage versus the open interest change in the last 24 hours, also in percentage, and overlaps them together. And I have the feeling that the alpha is when the open interest overperforms the price change in the last 24 hours, there's usually a reversal. For example, in here, open interest increases 5%, but price only 4%, and then you get some top there. To the downside as well, open interest wipes minus something percent and price a little bit less, and you get the reversal. All the previous region, you can see that there is no overperformance until that bottom. It gives you some idea of what's going on with the open interest. I don't think it's as precise to find the precise top or bottom. I guess it's more like an indicator that we can interpret it as the healthiness of the move. Maybe read it as, can we trust the move? And if there's too much open interest relative to the price increase or decrease, maybe you can take some profits in any direction that this happens. This week we have had some distribution from large holders. You can see a spike in here of 30,000 around in inflows versus just 21,000 of outflows. So there is a delta of 10,000 that caused that the Big Well Explorer spike to 0.9, very close to the ratio of 1. Ratio of 1 means that is almost balanced outflows versus inflows. And this specifically focuses on large holders, which are usually seen as the smart money. ETFs again close in the negative, so we continue with the distribution on spot ETFs. Okay, let's go with liquidity and order book data. You can see that we pinched the red liquidity but these shorts are very sticky. As soon as we got into 85, they opened new shorts. I think this happened around midnight when the price was forming this M pattern that I mentioned. Now the M pattern is slightly larger, at least on the 15 minutes. You have a neckline around here. Remember that what we needed to do is defend the 84, and at the moment we are forming a neckline that has a lower neck at around 83,700, and I'm sure that it can at least get somewhere in here to take some liquidity. Let's look into that. On the 2-week liquidity chart from CoinGlass, let's see how this is progressing, if we have any liquidity on the lower end as well forming. We have some forming at around 83K. You can see it there highlighted in the past 2 weeks. Let's see with the zoom. And on the upper end, that 85 has become smaller, whereas the 87.7 remains quite bright. And I think is the largest one at the moment on the heat map. There's usually some discrepancy when we look then at the liquidation map of the last 30 days. Let's refresh it. This is the way it was looking last night. And let's see if there are new peaks. We still have the 78.8, that's the largest on the lower end. And we have a flat area in here from 79.6 all the way to where we are in the price. The largest one, interestingly, are at 85.7. You see that the difference against the heat map, it should be showing the 87 something, but in here it shows a depression, which is very interesting. It could be that this is 30 days and is capturing more than double the data of the previous one, but I don't think so. There's something odd about this. Let's now look at the order book. Let's do some surgery to all the data. And as you can see, we are starting to have some negative funding rates. That by itself is a bullish signal. What is not that bullish is that the longs have really pulled out before the weekend, 23% reduction on the long side. These sharp declines in longs usually mark a local top, which is more or less what we are seeing already, because we went to 85, almost 85.5, and we are retracing to 83.6. So the effects of this decline is already seen, and longs are starting to very humbly come back from the bottom of 54. When this bottoms as well, we also tend to find a bottom in the price. The bottom on the price was seen in here, in here. Let's see if that overlaps. Interestingly, on the ask versus bid liquidity, I am seeing that some longs are starting to defend this line. You can see that we have 0.7, 0.6. This is a work in progress. There should be less volume over the weekend, so don't expect a lot of strength to defend this. We just see 0.06, which is impressive over a weekend. At the moment, on the delta of liquidations, 200K, same as last night, is putting the longs at higher risk, and is one argument against being able to defend that level. It's not a lot of liquidity, 200K is very small, but it could be enough over a weekend to go and take fair value gap 1 or 2 that I showed you earlier. Looking at fire charts, you can see that we still have the price suppression following the price in all this period. This started on the 9th of March and it's been consistently hovering the price and following it. At the moment it's located at 88K with a volume of 74 million. People trading today are mostly small orders in orange from 100 to 1K, but you can see that the purple whales are the ones that pull out fully over the weekend. They were pretty interested in buying around these areas on the 14th going into Friday. They remained there, they took profits and closed. Whereas the orange positions, way smaller, have been doing the opposite. Notice that also the brown is increasing and over the weekend is also increasing, and those are the largest ones as well. Let's see also the order book on Trading Light. This one updates much more frequently, and that bidding that we were able to find is evident now in the order booking here. You can tell that they are defending with 900 and 700 the levels of 83.5, 83.2. Impossible to tell that they're gonna keep those orders there, and unfortunately I won't be able over the weekend to look at this matrix of numbers even if I wanted to. I'm gonna touch some grass, spend time with the family, but you can see this in real time if you have time to get some popcorn and see if they manage to defend that level. I ignore why they're being so persistent in here, but all this move up has had some orders defending it and some orders suppressing, which tells me, is this an exchange or some big whale that really wants to drive the price in certain direction to get some specific result? Let me know what you think about that, because contrarian to what you might think that this is very common, this is not that common. For example, in all this area in here, I don't see any orders at the top of the price following it so closely. On the lower end, we still have 72.5 and the 666666 has reduced to 700 only. Fair value gaps, we have an overlap in here with the previous indicator that also shows fair value gaps. We have the 83, 82, 81. On the upper end, we have the 86 and the 88 that I'm hoping that we only go for them during the week so we don't create CME gaps. So this is the way general markets closed. Let's go now with the indexes and stocks. We do want to stay informed on general markets because at the moment politics, geopolitical is directly affecting general markets, and crypto is just a slave of all of that. It doesn't have its own opinion, and most people that are only trading crypto, then they don't really understand why is crypto correcting. My fundamentals are top notch, then why is going down? And they forget to look at the big picture. So let's quickly scan through things. DXY breakdown, still holding in here the support. It will be ideal if we close around the 40s so we don't reclaim this and we don't show any strength. A stronger dollar could be bad for risk on assets. So far we haven't seen the effect of this correction of the dollar. We should have seen something more positive, but we have other things to complete the big picture that are not necessarily helping with that. Call it S&P and Nasdaq also correcting. So we have a correction together of the stocks indexes with the dollar. Ideally, we want to see dollar correcting, but assets to start moving up. But with all these uncertainties, that is not the case. And because of that, gold has become stronger, is back below the $3,000, but is building on the RSI many bullish patterns. We already hit the target of 77, but this starting to look like a big cap and handle, which I won't say is gonna fulfill the full target because that's gonna go beyond 100 possibly, but at the very least getting into 85 weekly RSI I think is possible, and that target takes you to around 3.5k. It is a moving target, but at the time I did the calculation, which I think it was 2 days ago, it was pointing there. VIX, it put a topping candle in here, which could be indicating that maybe we're gonna cool down with the stocks going down. Ideally, I would have liked to see that this comes back inside this range. We've been trading in this range for the volatility index since 29th of July after the breakout that we have with those events in Japan. So this should be seen as some relief. But what we really would like to see is if next week we come back inside this range for another contraction of the volatility, allowing assets to maybe recover a little bit. But if this just becomes a retest of the breakout, like for example, we test this line next week, we close there, and the week after we do another high, that's really gonna hurt. So definitely worth watching out on a weekly basis, the volatility index. And Nasdaq fulfilled our first target of 19.3, and I'm hoping that next week we continue to hold that level and it doesn't become a deeper correction like the one we have in 2022, because that's bear market. The same goes with S&P. We achieved our target and I don't want to go beyond that. We were talking about the M pattern, and you can see that after we already achieved the first target, you see all the other influencers to start talking about the S&P and the deeper correction. We were talking about the deeper correction from the moment we started seeing the breakout on the VIX, because the VIX, once you get one explosion, then you get another one, maybe three of them that are mild, and then you get an impressive one. So far, I will say we have had just one This maybe counts as the second one, but it's still too small to consider it. And when we really got worried was at 53 actually in December, when we had the breakout in here on the RSI on this channel to the upside for continuation and bigger, larger expansion towards 83 RSI. Russell has achieved, we could say, maybe 60 or 70% of the target to 1900. And it has also confirmed losing support on the weekly chart. I will say pretty much all the stocks are showing topping patterns. Google, Apple, Nvidia, watch my videos early this week. I cover this projection and targets that I have in mind. Amazon already achieved the target. Tesla is in my value area. I talk about support. If you didn't watch my video on Paul Barron network, Tesla is at support on the weekly and on the monthly. You can see that is the case. We also have this support on Tesla at around $212. So when we are meeting with that trend line, we are meeting with monthly support on RSI and weekly support on RSI. That is a big thing. We had the breakout, and if we defend that support in there, we can have further expansion in this direction. There's been a huge correction already on Tesla. This is 56%, and Bitcoin loves to follow what Tesla is doing, and nowadays also what Nvidia is doing, right? Microsoft has built the bearish pattern in here on the weekly time frame with some sort of head and shoulders, and it's pointing towards a target of $300. Meta closed below the 21 weekly and broke down on the weekly, so it's pointing with a target to $400. MicroStrategy is for a second consecutive week testing resistance at 300. The full target initial is $180. Guys, I'm hosting a trading competition on Bluffin. Bluffin is an exchange that doesn't require KYC. All you have to do to be part of this trading competition is look up for the first top link in the description and click the button register now using an account open with the Trading Parrot. We have 11 days to compete on this. This week, if you missed it, if you haven't been able to watch the videos, I introduced a new tier on my Patreon. This new tier on my Patreon offers articles together with a Q&A weekly and private TA. The way it's gonna work is that people are going to access a poll. They're gonna vote. Each person has 5 tokens that you can vote. Before the stream, we take all the votes, we take the top coins, and we go in priority order. We also capture all your questions. You can ask questions during the live stream. The live stream is going to be private just for the elite members. That's the name of the new tier. After the stream, a day or two after, the video is going to go live on YouTube. So even if you don't join, you're still going to be able to watch the TA and the answer to the questions. And if you want to join, if you feel like there's value there, you can always join and be able to ask your questions and get them answered in a private live stream with just a handful of people. I'm very excited and I'm looking forward to the first stream, which is going to be next Thursday. I'll see you there. Bye bye.